Want to know how you can gain access to capital to jumpstart your journey to entrepreneurial success? For entrepreneurs who are just starting out or those who have been in business for years, Minority Business Access is your podcast. Welcome to our show, where we will guide you in avoiding the pitfalls and thriving in your chosen business. Now, onto the show with your host, Solomon Ali.
Hello, everyone. Hello. Thank you so much for tuning in to Minority Business Access. I am really thrilled and excited that you guys have all tuned in today. You know, we're going to continue to talk a little bit about stocks, for investing in stocks and things of that nature for beginners, okay? Because a lot of people basically just want to know, hey, I got a few dollars, what do I do with my monies and stuff like that? And how do I make some really great returns? I'm happy and comfortable with my job, doing what I'm doing, or they're working a job and they're like, hey, I'm good for right now. I just want to make extra money on the side so they can do, whether it's pay for the kids to go to camp, whatever, you know, pay extra medical bills. So we're going to try to cover some really simple stuff that you can do in actually investing. We'll always talk about how to determine which company to invest in, what to actually look for, the fundamentals of things that we look for at Solomon R.C. Ali Corporation, my team and I, what we actually look for to actually invest, like the management team, arranging the capital, reinvesting in the business, and the industry itself, the double or triple digit growth. So we'll talk about those things as well. When you're investing in a stock, what does the volatility actually look like? When should you be concerned about the volatility? Because that's another thing that will be important. But right now, it's basically, we got a video that my team went out and found for you to actually talk about, and the guy's name is Jack, talk about just investing for beginners. They brought it to us, and he's like, wow, really good at what it is that he's doing currently. So everybody's excited about it. My team's excited about it. They really believe this will be a big benefit and a help to minority business access for people who are looking to make investments. So let's get to the video and let's see what's going on.
So what we are going to be talking about is how to invest in the stock market for beginners. I've invested a lot of my money. In fact, I've invested most of my money in the stock market over the past 4 years because I am 22 and I am a pretty good investor. I've only lost on one deal, and I'll explain what that deal was and why I had to lose money on it. So yeah, we're going to talk about some basic principles that I wish I knew when I started out. And, well, I kind of did know, but like when I was starting to gather my research, I was researching when I was 16, and then I eventually was able to invest when I was 18. So I kind of knew what I was doing when I started, but very
guys, let's stop it for a minute.
So I'd like to start.
Guys, I want you to understand the importance of this. He started when he was 16. I didn't even know really about the stock market or what the stock market was at 16. All I knew is I wanted to be an entrepreneur and make $1 million. That's all I really knew when I was his age. So it doesn't matter how young you are. Now he's 22 and he's doing a pretty good job and things like that. I'm 56 and I'm learning from this guy a few points and things like that. So no one is too old to learn or too young to learn, or we can learn from anyone. Okay, it doesn't have anything to do with age. So don't be intimidated that, oh, you might think you're too young or you might think you're too old. You're not. Just be willing to learn. Come with the right mindset, come with the right attitude, and acquire some knowledge that you can use to pass on to your family, to your friends, things of that nature. So be willing just to acquire some knowledge today, okay? So back to the video. Here we go.
Anyway, some very, very basic principles. So I'd like to start out with a quote from Warren Buffett, and it's like paraphrasing. I'm paraphrasing, but he says something along the lines of, invest in the stock market as if it wouldn't reopen for 10 years. And so that's the perspective I take. Invest in companies that are going to be good in the long run, no matter what. A lot of people Actually, we're going to be getting to all this. So just invest in very good, safe companies, and you're going to be just fine. So, again, what I will say here is buy safe stocks. And what do I mean by safe? I'll explain. So buy safe stocks. Well, mostly safe. Buy safe stocks. And my recommendation that I tell all of my friends who I've helped start investing is at least 80% of your stock investment should be in some sort of safe stock that you know is not going to go to zero at any point in the next 10 years. And so what companies would that be? Well, like what stocks? Very first example is the greatest stock of maybe all time in my mind is Coca-Cola. Coca-Cola. Because they increase their dividend every single year, essentially, and the stock is always essentially gone up. It's go through cycles, but it's gone up over the past 100 years pretty steadily. So stocks like Coca-Cola, Canadian banks. I know in the USA banks aren't too safe, but certain banks are good. Etf Funds. And so I'll explain what those are right now. Some ETFs. So what ETFs are is it's a collection of stocks, I should say. So let's just say you want to invest in, I don't know, in the real estate market through stocks, okay? And so instead of investing in one company, you can invest in an ETF, which stands for an exchange-traded fund. And essentially, you're betting that the real estate market will do well because the ETF is invested in all of the real estate market. And so that's pretty much what an ETF is. So if you're comfortable, like don't invest too much in the tech industry because that's very risky. But let's just say you want to invest in the banking and financial industry. Go and buy a financial ETF so that all of your eggs aren't in one stock, in one basket. And yeah, so those are just some examples. Buy safe stocks.
Let's pause it for a minute.
Don't buy. Okay, we'll get to a lot of these.
He liked Coca-Cola as a safe stock, certain types of banks, and the Canadian banks are doing pretty good, so a lot of the banks in Europe are doing really well. ETFs, I'm not a fan of. They're okay. They remind me of mutual funds and index, so I just don't really care for them personally, but it is a safe way to go if you're apprehensive about the market, you're not certain, things like that. It might work for you, okay? See, investing is about what fits you, all right? So what we like to do at Solomon R.C. Ali Corporation, here's what we like to do. One, we like safe stocks too, okay? So I'm going to say buy safe stocks too. But here's what I'm going to consider a safe stock. I'm going to flip that verbiage and I'm going to say safe company. Because before I look at a stock, I'm looking at the company itself. The company has to make sense. Then I'm looking at the industry people. The industry must make sense. If the industry is on a down spiral, I'm probably not going to touch that. But if the industry looks like it's going to go have an upper trajectory, we're probably going to look at that industry. If the company looks like it can do a double-digit or triple-digit growth, we're going to be looking at that, okay? And I don't mean double-digit quarter by quarter. Everyone that knows that we like stuff long-term. So we're looking at anywhere from 1 year out to about 5-6 years, people, a minimum. That's what we're looking at, long-term, because stocks go up and down. But when you do your due diligence, the thing that you will find is that you can pretty much time the market and you can sit there with confidence. You can go have a cold glass of Coca-Cola, right? You could have a cold beer. It doesn't matter because you know that you've done the homework that's required to hold your position, so you're not getting off your position too easy. It's like, hey, if you're an athlete or anything like that, right? If you're prepared, if you're doing the exercise, you're doing the workouts and stuff like that, when you hit the field, you're ready. But if you're not, then you hit the field, you're going to get tired, you're going to get exhausted, Okay, you're not going to perform as well as you should. You're not going to perform as well as everyone else is performing because you didn't put in the time to prepare. And it's the same in buying stocks. Okay, before you buy a stock, right? Before you buy the stock, you got to buy into the company. You got to buy into the company's vision, the company's management, and the company's history, as well as where the company's going. Okay, so let's go back to the video just to share that. Begin, before you buy a stock, you need to buy into the company itself, which means do your homework, do your due diligence, know about the company. Otherwise, buying a stock, you're just playing chance.
Don't buy too many risky, don't buy, okay, we'll get to a lot of these. I have a lot of things I want to talk about. So, buy mostly safe stocks. Yeah, and so, yeah, Coca-Cola, stuff like that. Stay away from speculation. Like, I guess I should write that. Stay away from speculation in the first place. I'll explain what that is.
He's saying stay away from speculation. And again, that's your friend comes to you, your brother, your mother, whoever, say, hey, this is a great stock, you should buy it. Okay? Or just because a press release came out, oh, all of a sudden you jump in and buy it. No, 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 no. Due diligence, due diligence, due diligence. Otherwise, you're gambling with your money, your hard-earned money. So if you don't care about your money, then just throw it away. I can come by, or anybody can come by and say, hey, good stock. And you jump out and buy it. Well, that's a fool. Don't be a fool. All right? Do your due diligence, do your homework. Take a look at what's actually going on, okay? When you know what's actually going on within the company, you go buy your stock. Get comfortable there first. Tech stocks, I disagree with him because I made a crap load of money investing in a tech company, so I disagree there, but only because this. Guys, it comes down to this one more time. Everyone here, right? He's talking to people that's a little different audience than what I'm talking to. His audience are looking to buy retail stocks. They're not looking to get in early on the company. That's very important, buying early. If you imagine, okay, this being the early stages and you can own it at this price, okay, which is a lower price, and let's say here's the middle stage, it's a wholesale price, and then here's the retail price, okay? If you're buying it retail, you're spending more money for the stock, okay? But when you join in like with Solomon Arciali Corporation, here's what we do. We show you how to buy a stock or in the early stages. But what we first do is educate you on the companies, on the industry. Because once you're educated on the company, on the industry, right, now you can pick your stock with confidence. Because the stocks that we do, you might sit back and say, hey, that's not for me, okay? But you now have the knowledge and the expertise, okay, combined with what Jake is showing you, to go out and pick a nice retail stock. But please don't pick that retail stock until you do what? That's it, your due diligence, because that's extremely important. So when you go to Solomon Arciali Corporation, one of the things you'll see is the ABCs. We arrange capital, all right, for companies, CEOs who are looking for money. Why are they looking for money? Because normally they're trying to grow and expand their company. They're trying to scale it. Don't you want to be a part of a company that's growing and scaling, especially in the early stages? That's where you're going to have the tremendous amount of growth for your money. So as they're growing their business, your money is growing, okay? So those are the kind of companies you really want to participate in. The other thing is B. We kind of help build wealth. We show you what to do and how to do it. What are those mechanics that you should be looking for in a company? So then when you look at the stock, you already know. You know it's a good fit for you. You know why it's a good fit for your portfolio. When the stock is going down, you sit back with confidence and say, oh, no, I'm not jumping out. Or if it goes up, and you can sit back and say, no, it's going higher. You will know because you've done all your homework, because you understood. So that's what we do in helping people to build wealth, to understand what it is that we do. How do we make these decisions? Last thing we do is consult. We consult people looking to build wealth, and we consult people who have companies, whether you're a startup company or whether you're an entrepreneur that's been in business for 6, 10 years, and you're trying to grow your business. We give you the strategies that's necessary because we understand a little bit different than what you're understanding as far as your day-to-day business. We understand how to go in the industry, what your competition and your competitors are looking for. So if you're looking to invest in a company, what's one of the things you want? You want to make sure that company is going to be what? Well capitalized, right? It's got to have the money to grow. So if they have money to grow and you investing in that company, you're going to share in their growth as well. But what you get as part of the sharing in the growth is you get a huge return on your money. So that makes it really exciting. We're going to get back to Jake. He's doing a fabulous job. I really like this guy, especially for him to be so young. He has a lot of experience, it appears, on making the right stocks work for him.
From what's called spec, tech, and we'll just say commodities, I guess. Com. Okay, that stands for commodities, the com. Okay, so stay away from those when you're starting out. Unless you're on Wall Street, just don't buy these for the most part. So a lot of people lose a lot of money betting on the tech industry, on a tech company. Speculation. So what speculation is you're essentially, it's a stock without a dividend in the first place. And I guess I'll explain what a dividend is. But you're essentially putting all your eggs in one basket that the value of the stock will go up within a day or a week. And if you don't make money on that, you can lose a lot of money. A lot of people do. So don't do speculation. Always invest in the long term, or at least middle, like 2 to 5 years or 5+ years, or maybe even 6 months. Depends. But don't do speculation. So don't invest for the short term. Don't invest into a lot of tech companies unless they're Apple that pay a dividend.
You've reached the end of another episode of the Minority Business Access Podcast. Connect with us at solomonrcali.info to leave a review and access more resources. We hope you enjoyed this show and found great value. See you at the next episode.